Hi, this is Amigo with the Bulletin Board Heroes here at Zach's Traders Cafe for Thursday the 28th of March. Starting off with the FTSE 100, where we've got that 17-year view with the rising trend channel from 2007. That's heading for 8,500, which is our best case scenario target, maybe over the next couple of months. In the meantime, we're still grappling with the area just under 8,000, a V-shaped bull flag breakout, which is nice. So hopefully the 80-20 target that we were looking for at that late May resistance line projection will be hit over the next few days. That's obviously near the record territory of February last year. I will only update that when we actually get over the line, because we've obviously been here many times over the last 20 plus years. On the downside, 78.60, the top of that old channel from back in August, and then the worst case at the moment, 77.90, but I think hopefully this is the big breakout that we've been looking for, especially with those three RSI rebounds at RSI 50 that we had at the 10 of the month. I haven't seen that for a long time. Moving on to the DAX, and here the DAX hopefully leading the way in terms of what the FTSE might do next. Here you can see that we're making swift progress towards the top of that rising October trend channel, 18,700. We were looking for that by the end of next month, and that we've just narrowly managed to avoid getting there by the end of this month, 18,700, while we're above recent resistance around the 18,100 level, which was this sort of the early March or mid-March resistance for this market. Moving on to the Dow, and an explosive move yesterday, if I remember correctly, market up again with a sort of a V-shaped bull flag situation, so hopefully we'll head up towards the 40,300 or 400 area early in April. Best case would be by the end of next month up to 41,300, which is the top of that rising October trend channel. RSI still only at 64, so plenty of gas in the tank. If we do break down, the worst we're looking for at the moment is the 50-day line area around 38,600. Moving on to Bitcoin, which had the boost from the LSE during the week. Here we've got a nice flag trading basically at and above the old 2017 record high, around 68,000. We're looking for 81,000 by the end of next month, which is the top of that rising January trend channel. Downside at the moment hopefully limited to the 65,000 area at the floor of the January channel, although maybe there might be a last look at 60,000 before we head higher. On to gold, and here the market looking steady at and above the 2200 level. 2200 was the initial March high, and we're looking for 2270 now by the end of next month, which is a July resistance line projection, and the upside now valid at least while we're above the 2180 area, which is the recent swing low. Moving on to the stocks, and you can tell we may be back in a bull market. If Amigo is up 100%, things must be good. Here we've had an unfold gap to the upside through the recent neckline resistance of 0.25. Above that, obviously the 200-day line at 0.39, an obvious target, but could be up to 0.5. But obviously in the case of Amigo, there's always the chance of some fundamental rug pull, which could mean that none of those scenarios will happen. Moving on to a company which really impressed today with its RNS, AdvancedADVT, and here we've got a situation where we've hit previous targets here. The first one was around 105, the next one around 140. We're looking for that over the next week or two while we're above the recent resistance around 123. Probably need to allow for 120 there, but the sort of the sizzle here is that through 140 we just retest the best levels that the stock had towards 160. That could even happen as soon as the end of end of next month, rather, the end of April. On to Arkle, and here the picture of a potential broadening triangle base, bear trap as well below the old December support. That was at 0.3, above 0.3. Looking for up to 0.55 maybe by the end of next month. Obviously it's a punchy call until we get through the 200-day moving average at 0.36, but taking a guess there with that bear trap from below December support, a bit of bullish divergence. This could be the turnaround time. Jersey Oil and Gas, very disappointing over the course of, well, I suppose 2024, not been a great year for it so far, but just the first signs of a break outside this falling wedge. The number in question, £1.55, above that we're looking for £1.71, hopefully over the next week or two, which is the 50-day line. Best case would be up to 190 by the end of next month, and there's bullish divergence there as well, so that maybe that will help the cause. Moving on to Jubilee, which has at least had a decent reaction to today's RNS, unfilled gap to the upside above the 50-day moving average. We've already had an unfilled gap to the upside earlier this month, so the second one does suggest that we actually are ready to turn around. 6.75 pence, maybe by the end of next month. It would not be a too optimistic target. That's where the shares were back in December, and we're looking for that while we're above the 50-day line there at 5.45. Microlise, another company with a great RNS today, and here, company still rather under the radar, but we have been following it, especially since the gap higher that we had back at the end of January. Current situation is that above the 50-day line, looking for up to 157 by the end of next month or even sooner, but it doesn't really look as though the shares are in recovery mode, and that cross between the 50 and 200-day lines earlier this month looks as though it should help the cause as well. Moving along to Minoan, which after many years may be ready to please its holders. Here we've had a ricochet off the 50-day moving average around 0.66. Above that, we're looking for 1.1 pence, perhaps as soon as the end of next month. If you're cautious, you should wait for an end-of-day close through the 200-day line at 0.78, but it looks as though it's on its way with that in the wake of that bear trap that we had back in January, February, so basically reverting to the floor of the range in the low 60s, and with that rising 50-day line. Onto a stock that nobody really looks at, which is MGC Farmer, and here you can probably see why from that chart, but we had an unfilled gap to the upside earlier this month, and it looks as though we've hit the bottom here, consolidating above the 50-day line and the floor of that rising trend channel from December. The view at the moment is above 20p. We're looking for up to 31 pence by the end of next month, and notice all those only blue candles that we've had there basically for the whole of March, so pretty impressive stuff. Mothercare is next, where there may be nothing going on at all on the M&A front, but it sort of just smells a little bit as if there is something going on there. It could be, obviously could go either way, but rising trend channel there from August, and looking for up to 9.5 pence while we're above the 6.5 pence zone, recent support on the floor of that channel. Orosur has done really well of late, and we can see on Twitter that people are speculating nicely. Here we've got support above the 50 and 200-day moving averages. Initial target here was 4.85, and we're looking for up to 7.5 pence as soon as the end of next month, if this is the big turnaround that we were looking for. Again, we've got a stock which is bear trapped back above the December support, and that gives the chart a healthy look. Moving on to Predator, where after the rug was very unceremoniously pulled back in February, the shares have reverted to that rising trend channel from this time last year. The floor of the channel there at 8 pence. We're hoping for a gap fill attempt, at least up to, say, 11 pence by the end of next month. Ideally, we have an end of day or end of week close above the 9 pence area today, which is basically the floor of that gap. So above 9, looking for 11 at Predator. On to Skinbio, which has also rehabilitated itself very well. We've had a wedge breakout, and we've also had an unfilled gap to the upside during the week. See all those clear candles there. Initial target here, the 200-day moving average at 16.6 pence, hopefully over the next 2 to 4 weeks or even sooner. Upland is back as well, which is nice. Here we've bounced off the... we may have bounced above the 200-day moving average. Yes, we have, which is a leading indicator, positive indicator in its own right. Just want to see an end-of-day close above the 50-day line at 3.3 pence to give us a target of 5 pence by the end of next month or even sooner. That's it from me today. More updates over the bank holiday weekend.